You want to make some profits trading crypto or investing in crypto? Well, in today's video, I'm giving you guys a detailed guide for all beginners if you're looking to get yourself started trading and actually trying to get some profit, including some analytics and some free resources that I personally use to make sure I'm positioning myself just right. But I go through all of that step by step. So make sure you go ahead and press that like button. All right, first of all, we're going to need a platform to trade on and a platform to check prices on. To check prices, I use TradingView. I'll leave a link down below. And to trade on, for this video, we're going to be using Primexbt, a very popular crypto exchange. I'll leave a link down below. And I'm also going to leave some free codes down below that will, instead of just this $100 welcome bonus, give you either, I'm just checking it now, $500 for just a couple people, or a 20% deposit bonus. I've got about 15 different codes, so that could be pretty juicy. Check them down below. And otherwise, there's still some juicy bonuses for just signing up. I'll leave the link down below though. And I might just give it away to some of the top commenters, by the way, the $500. There's a couple different ones. Here you can see I just got myself $500 in my account, which is pretty nice for this tutorial. Anyway, generally speaking, there are a couple different ways to deposit, and you can see them right here, either via crypto, cash, or crypto via Visa card, actually. But once you've gone through any of these and you've got funds in your account, or you've used one of the codes down below, we can start to get into how to use those funds to actually hopefully make these short-term profits. And there are a couple different ways for that, but I'll explain everything in this video. All right, so now the first thing we've got to do is get a good grasp of what type of money we're looking to make. Money from investing or money from trading. These are two completely different ways to make money, because on the investment side, what you're looking for is to basically put money in, not do too much, and get more money out of it over a longer period of time. With method number two, the trading one, you're actually trying to actively make more money, which of course is more difficult, but if done right could result in way more profit. But people should not underestimate method number one. So to elaborate upon that a little bit more before we get into method number two, trading, investing, how does it work? Well, instead of looking at the 1 hour time frame where every candle represents 1 hour, we're basically looking over the daily or the weekly, as we're trying to uncover what the major trend is and how things look like over a couple of months. As through the investment strategy, we're looking to basically invest for the next couple of years. And we're looking to make sure that if the next bull market comes, as the market basically goes up and down and up and down, it goes in cycles every single time, that we have bought accurately, that we've bought our way in to then reap massive amounts of profit. And the primary strategy there would be to DCA, dollar cost average. And now there are hundreds, maybe even thousands of extremely difficult and potentially even very expensive insights you could use to determine when the best price would be. But one of the very simple ones I like to use has to do with market value and realized value. So the market value of something like Bitcoin would basically be the last traded price of Bitcoin times the amount of Bitcoin that are out there that have been mined. Whereas the realized value would say that not every single Bitcoin is mined at an equal price, and so we should also value them differently. Or as described in their own words, market value to realized value, this ratio, is the ratio between market cap and realized cap. It gives an indication of when the traded price is below fair value. This metric was created by some guys. Anyway, the long story short is that anything over 3.7 basically denotes overvaluation, and anything close to 1 shows undervaluation. And again, simply put, it just showcases, or what we're looking for is the closer it is to 1, the closer we are to undervalued Bitcoin. And this works for other assets as well, like Ethereum, for example. But that basically gives us a quote-unquote better price. And the core principle here is if you consecutively buy your way down, it doesn't really matter when exactly you started doing that, because right now, because of the way that the Bitcoin market moves, you'd be in a massive amount of profit. If you, for example, keep buying every single day or just keep buying every single time we have a significant drawdown, you'd be in massive profits. Again, just to put it into perspective, every single time Bitcoin hits a top, we see another massive 80% retrace where the price comes down significantly. And even right now, again, after Bitcoin hits 69,000, we came down about 80% before right now from the bottom going up roughly, I'd say 80% as well again. And there's nothing indicating that that won't keep repeating and that next time we won't hit another all-time high. So if we just keep on buying and then potentially actually exit as we get towards these higher prices throughout the next couple of years, that's one of the easiest strategies somebody can go for. Now, the point is, it's not, $100 every single day that you're making, but you're making huge batches in one single moment that hopefully will turn out to be a great success. Hopefully more than $100 a day, because the goal is to make every single dollar you spend right now be worth $5, $10 or whatever in the future. And if you buy consistently and in a smart manner, that should not be too difficult. Now, for trading though, things are significantly different. We understand that with investing, okay, when prices come down 20, 25%, there's going to be long-term holders that get in. There's going to be tons of people who get in. And as prices go up 100%, there's a ton of people who are looking to sell. That's the natural market structure. With trading though, you have to understand this on a way more basic level and understand that every single second, somebody's trying to buy and somebody's trying to sell. So you have to understand the trend over the short term. You have to realize you might only want to be in this trade for a couple minutes, a couple of hours, a couple of days, a couple of weeks, a couple of months, depending on your trading style, but things move fast. Anyway, to simplify all that, when you're trading on the short term, the most important thing to understand is that there's different sorts of cycles, different sorts of trends. You've got these very nice periods of sustained growth. This is what we call an uptrend because, again, prices are generally speaking moving up. When prices come down very significantly, like here 80%, and it just keeps moving down and down and down, that's what we call a downtrend. But there's also times where there's just not that much price action or just basically sideways movement, as there's not really weakness, there's not really strength in the market either. That's just indecisiveness, which you can see when prices basically just go sideways. But the most important thing you want to understand is that you want to trade the continuation of the trend. The simplest trading style out of all is not to find that big switch over, the moment that everything turns back around. Even though you'd make the most amount of money, the most amount of profit there, it's the hardest, absolute hardest to find, and you'll be wrong way more than you'll be right. What you want to be is you want to be more right than wrong, so you're going with the flow of the market. If the market is going up, well, we expect it to go up more, so that's how we're trading. If the market is going down, we expect it to continue to go down because that's the trend, and usually these trends stick for a while. So to give you guys a good example in the real chart, if we're looking at this price action right here, would you consider this an uptrend or a downtrend? Well, since the price keeps going from a high point to a low point into a lower high point into an even lower low point and continues on like that, we consider this to be a downtrend as the general direction is downwards. So what we basically try to do is establish the trend. After a couple of points, we notice, okay, prices are moving downwards. So in this case here, for example, we can draw in a line. In this very specific instance, it's a very beautiful parallel, but we basically could have drawn this trend after only a couple of movements and a couple of touches. To put it into perspective, let's say the chart looks like this. So you noticed, okay, the price seems to be moving in a certain direction on the upside and on the downside, and you draw in your trend lines. We basically expect this to continue until a breakout to basically look like this, or potentially this were to happen. But as long as it does not happen, as long as we do not see one breakout, we expect it to continue towards this direction. So what do we think is going to happen now? Well, we expect the price to go ahead and reverse. And the reason I am saying this only the moment that it hits the top and not actually the bottom has mostly got to do with the idea that we are, in this case here, in a downtrend, which again, for this initial move is a bit early to say. Preferably you'd wait for another bounce, but I'll explain it as we go on. So as time here progresses, you can see, okay, the price fell down hard. And as we continue on, let's just kind of keep this going for a little bit. Things don't move instantly. We now see it actually touched the top of our trend line perfectly. So, you know, we know here that our line is pretty juicy. You can see it tried to break out. We saw a slight little attempt, but it didn't really do too much. And that's why we don't try to trade this first candle either. We always want some confirmation. We'll go into that a little bit later. But the long story short is, as time basically continues on, you can see that indeed what we expected does continue on. And even though it doesn't have to hit things perfectly, the idea still, I'd say holds quite strongly that our best course of action here throughout this period was to basically keep looking for further downside. Now, this pattern I'd say is actually pretty perfect, which you won't see all the time. But let me elaborate on how exactly we could have traded this. So this initial period here was to basically establish what type of trend we're in. We're noticing our beginning point. Hey, we've hit a high point. What happens afterwards though? Well, we notice the price is coming down. We notice that it actually went below one of our previous low points. The price then went up, but it actually did not break our previous high point. After two of those, you've got my attention. We then basically decide to draw in the lines of how the price action is moving. We've established, okay, this is a downtrend, and now we're looking to every single time the market ticks back up, catch it on its way down. Again, that's because we're in a downward sloping trend. If the market looked the opposite, like for example, in this instance right here, where prices generally speaking are moving upwards, what we're looking for is every single time it comes back down, in this case here, it actually fell very significantly. We're looking to buy within those areas to catch it on the way up. So again, always establish what type of trend you're in first. And in my opinion, always work on the basis of confirmation. So if you're wondering what the confirmation exactly means, it mostly just has to do with what you're seeing right here or right here. Now, what I'm referring to is each single one of these things is called a candle. And in this case here, we're watching it on the 4-hourly, but it does not really matter too much. The moment we see a crazy movement or the moment we see something of interest, we're not looking to trade the first moment we see something interesting, because that can very often go wrong. What I mean with that is here, we actually saw the price move upwards ever so slightly. Now, even if this was a green closed candle, we wouldn't actually now think that this downtrend is over and we're going to break out, because first of all, it did not close above. And second of all, even if it did not make a confirmation candle afterwards, which would have looked like this right here. This initial one is the breakout candle. This is the moment that we broke out, and you can see there was a significant amount of power there. But afterwards, again, over the next 4 hours, it confirmed to showcase indeed that prices will continue to go up. For these reversals that again go along with our trend, so these pullbacks basically that we're looking for in this downtrend, follow a similar pattern where you're not looking for the initial candle, all you're looking for, but you're only going to place a trade if indeed it shows as a confirmed thing via the second candle. And so a real world example on something like Primexbt will look like this. Let's say we're starting our research right here. We established, okay, the price is pretty low because it just came down a significant bunch, but because it's been sideways for such a long while, we're expecting a potential change in trend. And well, apparently in hindsight, the uptrend started at that point. We see the price go back to some previous highs, break through, rebound quickly afterwards, setting now a new support at our previous resistances, bouncing off further before pulling back. This could have been an entry, but we were not too certain just quite yet, and you can never time the bottom perfectly, but this could have been a juicy entry as we're getting back to prices we already previously were fighting. And so the moment that we came back into this area of previous support, or rather resistance now turned to support, this is an area where we could have looked for a reversal. And so the moment we saw it reverse with a confirming candle right afterwards, we could have opened a trade. But if we wanted to be safer and actually establish the trend first, what we're seeing is that quickly afterwards, we came back to this resistance, broke through, hit a new high point, and then when we came for the pullback again, hitting these previous high points, right now doing it twice, we've basically established a trend. And so from that point on forward, exactly at this price right here, where we pull back to previous high points and we reverse, so we're actually finding our support right there. The buyers are sustaining it, and we get ourselves the confirming candle, which is the, hopefully you guys can see it perfectly right here, the second green candle right here. The moment that we saw right there, that's a perfect point to open the trade right there if my face was in front. So instead of spot, you, by the way, now on Primexbt also have yourself futures where you can open long and short positions to make more profit on smaller moves. So instead of just buying, you can actually trade them with contracts. You can go through the tutorial if you want to learn more. It'll just basically explain everything about how all the buttons work, etc. And I must of course explain that in the real world, every example will be slightly different, but the basis still stands. Let's say the criteria for our trade have been met. I've got tutorials for all this, but we choose the margin type we want. In this case here, we'd go for isolated, for example, at 5 or 10x. Let's call it 10x, which basically means that every single dollar we put, the contract is going to be 10 times as much. So if we put $1,000 into this trade, the actual trade is going to be $10,000 worth. But that also means if the price goes up 1%, we basically make 10%. But if the price goes down 1%, we also lose 10%. And so if you're wondering what a trade like this could have looked like, the moment we came back into the zone, we were looking for the reversal with that green candle like I just showed you, because of all the factors I explained before. The moment that we see that, we basically put our stop loss at, for example, here 3% down. I'm just looking for my stop loss to be a little bit below the zone where a lot of price action has been recently. So it could be slightly below this purple zone right there at, for example, minus 4%, meaning that on the amount of money I put in, the worst I can lose is 4%. Depending on my leverage though, that's again a multiplier. And with a trade like this, I'm looking for a 3-to-1 ratio. So basically the profit is 3 times as big as my loss, which would mean we'd be at roughly 12% profit here, at which we'd comfortably cash out. And you might actually only cash out a bit. So it means you open the position right there with your stop loss slightly below the purple zone, with your first take profit, which is where you make your money at our target of a 3-to-1 ratio. But then actually at that point, once you've taken half of your profit or even more, maybe even 80%, you actually take this stop loss away. You move your stop loss to your beginning point, meaning you can't lose any money anymore. You can only break even or make money. And now you extend this target towards, for example, 1.5 times what we just had, or even 2 times what we just had, which in this case would have easily worked. Meaning we now got a significant amount more profit by letting this trade rip for a bit, as again, this reversal was significantly strong. Again, if we try to take too much profit though, you can see eventually would have actually ended up never hitting it. So always try to stick to your strategy and don't just try to, oh, we always want more it, because very often then you'll lose. And depending on whether or not you want to trade with leverage, like I said before, either this global market section is for you or this crypto future section is for you. And you basically open the trade either immediately via a market order, which is right here. Just basically means, hey, I want to buy X amount right now. We buy with 10x leverage, place the order. Or limit, which would basically mean, hey, we want to buy below this specific price. Again, we could just look at the exact price and then say, hey, we want to buy below that, buy right now. Or over on the main spot buying part of the website, all you've got to do is just press the little buy button right here. And then you could even put in a stop loss or a take profit. We talked before, right, about exactly where our stop loss would have to be or where our take profit would have to be. Again, hopefully these speak for themselves. Your stop loss price means at this point is basically going to sell off whatever you bought to make sure you can't lose any more. And take profit is at this price, I want to basically take my profit in to make sure I, win money, make money, whatever you want to call it. Again, like I said before, this limit and market, the biggest difference is that the market just buys it right now, whatever the price is, and limit, you can insert exactly what price you'd want to buy at. And then right next to it is the amount you'd like to buy. Again, 0.01 Bitcoin or 1 Bitcoin or whatever you want to buy, insert it there. And of course, right here, we'd have to insert exactly what we want to buy. As over on Primexbt, you can buy a significant amount of things. You can kind of see it from the list over on the left. You've got a ton of different pairs. You can even do a lot of Forex trading. But yeah, that's my simple guide. I think by far the best strategy to trade the markets is to trade these impulses, to trade with the trend. And I've noticed over the last decade, it's all about managing your risk and not letting your emotions take over. That's the most crucial part about trading, to understand exactly what you're getting into and to stick with your plan. And of course, guys, do your own due diligence. Always understand the risks involved. And if you want to see another video, make sure you subscribe to the channel. And of course, check the links down below to Primexbt if you also want to trade for yourself. And I'm also giving away some codes, so make sure you put a comment down below and join the Discord for a chance to win one of these codes. I'm going to give them out in, I think, like 48 hours. I think that would be pretty cool.